mode.
Good morning, everyone, and thank you for joining us for why trading Forex binaries or spreads are more beneficial for new traders. Now, before we get started, I would like everyone to take just a moment to read over the Nadex risk disclaimer. Trading does involve risk, and it may not be appropriate for all people, okay? Even binary options does have some risk associated with it. Now, this morning we are going to be teaching you. This is an educational room, and I just want to make sure everybody understands that. And that's what the risk disclaimer does for us. So take just a few seconds to read over the disclaimer to make sure that you understand it. And yes, good morning to all of you as well. I'm glad to be here today. Now, for those of you that do not know me, my name is Gail Mercer, and I'll be your host this morning. And I have about 15 years of trading experience. I actually stopped counting at 15. I did start out with a company that programmed indicators, and I became simply enticed by the price bar. I thought that was the coolest thing I had ever seen. I do specialize in both price action, volume analysis, and divergence because I believe they are leading indicators in the markets. I'm also a frequent contributor to Stocks and Commodities, Traders World, and Top Shelf magazines. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, as well as the New Trader's Guide to Trading Nadex Binary Options and Spreads. Now, why should you trade Forex versus other markets? And this is really designed to address new traders. To me, the first reason is Forex is truly a 24-hour market. It actually is open 23 hours a day because it closes every day from 5 to 6 p.m. They call that the settlement hour. There are 10 markets available versus the 4 U.S. indices or the Asian futures or the European futures. You have the Aussie yen, the Aussie dollar, the Euro British pound, the Euro yen, the Euro dollar, the British pound yen, the British pound dollar, the USD Canadian, the USD Swiss franc, and the USD yen combinations. There is always a market open with currencies. Japan and Australia open at 8 p.m. New York time, and they close at 2 a.m. New York time. Hong Kong opens at 9 p.m., closes at 4 a.m. All of these are based on New York time. We also have France, Germany, London, Sweden, and Switzerland all opening at 3 a.m. and closing at 11:30 a.m. And then you have Canada in the U.S. cash market opening at 8 a.m. They also close at 5 p.m. So not only do you have a market opening just about any time you want it, but you also have a lot of markets that overlap. For example, Japan and London overlap, and London in the U.S. overlap. Now, there are fewer opportunities on the indices because they're only open from 8 to 4 p.m. Now, you could go out on a daily spread the night before, but again, in general, with the 2-hour binaries, you're going to have more opportunities on the Forex market. When you're looking at commodities, they even close earlier than the indices. For example, gold closes at 1:30 for the daily. Crude closes at 2:30. Silver closes at 1:25. And they all have different expirations. For example, the indices have an expiration in March, June, September, and December. Gold has expirations in February, April, June, August, and December, and crude has an expiration every month. You don't have that on the Forex market. Now, one thing about the Forex market is you need to understand the way it moves. It does not move in points, it moves in pips, okay? A pip is simply a full increment in price. Now, that used to be really easy to explain, but now we have what's considered a half pip, okay? So, for example, in this one, you see it's 1.0892 apostrophe 4. That apostrophe 4 is the half pip, okay? That's how we identify it. And it's actually the 5th digit, not the 4th digit. I just saw that on the presentation. So 1 pip in movement would be the 92 to 93, okay? So you look at the 4 digits, the last 2 of the 4 digits, the 92, if that goes from 92 to 93, that would be considered a pip movement. Now, most of the pairs do use the 4 decimal points for pips. The 5th is the half pip, with the exception of the yen pairs. The yen pairs only use 2 decimal points. The 3rd decimal would be considered the half pip, okay? So in this example, the USD JPY, 110.449, 9 is that half pip. So a 1 pip movement is from 110.44 to 110.45. Now, indices get even more complicated because each indices moves differently. For example, the Wall Street 30, which utilizes the E-mini Dow, moves in full point increments. The US 500, which utilizes the E-mini S&P 500, moves in quarter increments with 4 increments or ticks to 1 point. In the US small cap, which uses the Russell 2000, moves in 10-cent increments, 10 ticks to a point. Commodities moves differently than the indices. Gold moves in 10-cent increments, 10 ticks to a point. Crude moves in pennies. So you have to learn a lot more information if you're wanting to trade the indices or the commodities. Now, here's a comparison. The Aussie dollar, the euro dollar, and the USD yen, they have 22 2-hour expirations available. Then you have the dailies, which are 3 a.m., 7 a.m., 11 a.m., 3 p.m., 7 p.m., and 11 p.m. All of these are New York times. Then you have the weekly, which expires Friday at 3 p.m. Now compare that to the indices, which only has 7 2-hour expirations and 2 daily expirations at 4 p.m., and they have 1 weekly. Versus commodities, which has 4 2-hour expirations, also has 2 dailies and then a weekly, or crude, which has 5 2-hour expirations and then 2 dailies and 1 weekly. So just from looking at this chart, you can see you have a lot more opportunities on the Forex side versus the indices side. There's also a difference in volatility. The U.S. market hours are typically the most volatile, okay? And these are generalizations, okay? Because sometimes you can have huge volatility during Asia. You know, a great example was Sunday, we had the French election. So, you know, the euro spiked up like 200 pips, okay? That's abnormal. Generally, the U.S. market is going to move the most, followed by the London market, okay? It has less volatility than the U.S., but it has more volatility than Asia. Asia is generally the least volatile. Now, does everybody in the room understand what I mean by volatility? because I don't want to be using words that you don't really truly understand. Okay, we have a couple of people that don't. Volatility is how much an instrument moves from high to low, okay? For example, if the high was $5 and the low was $1, the volatility is $4, okay? That means it could move either way, $4. There's been a total movement of $4, okay? Now, the greater that volatility is, the harder it is for new traders in general because the markets can turn faster. Slower markets will turn slower than faster markets, okay? Fast markets can actually turn, I call turning on a dime, okay? The greater the volatility, the greater number of strikes that are actively traded, okay? Now, what that means is you may have a standard of 12 strikes at any 2-hour binary, but how many of those strikes are actively being traded? In other words, I can get in with maybe $30 of risk or $40 of risk or $50 of risk. The more volatile that market is, the more the number of strikes that are actively traded. Okay, I'm not talking about the ones that are at $10. Okay, I'm talking about in general, how many of those strikes actually have a premium that you can trade. Okay, now Forex binaries offer more opportunities because it is around the clock trading. So let's say that you have a day job that you work from 8 a.m. to 4 o'clock. Well, you could actually still trade Asia, or if you're a morning person, you could get up early and trade London. Okay, so it's not just a matter of being there for the US Open. Instead, you can say, okay, when do I have time available on a consistent basis to look at the markets, and is what market opening is around this time, okay? Forex also allows traders to utilize the lower volatility to learn how to trade the markets. You know, if you're trying to learn to trade and you're trying to learn on the US session, that will typically be the hardest session to learn on because it's a faster moving market, okay? Now, if you're trying to learn even something simple as price bars, okay, it's much easier to learn that if you're learning it on a slower market and you can actually kind of talk your way through the market, okay? On the US side, if you've got the price bars and they're moving real fast on you, it's going to overwhelm you and not allow you to fully comprehend the method, okay? Now, before we go over and look at some charts this morning, does anybody have any questions? And while I'm waiting on you, I just want to give you my contact information. You can visit my website at tradershelpdesk.com, or you can email me at gm@tradershelpdesk.com as well, okay? What is a strike price? I'm going to show you that, Terry, in just a moment. Any other questions? Okay, let me pause the screen real quick and we'll bring over the actual Nadex platform. Okay, is everyone seeing my screen again? Okay, Terry, you asked what is a strike price? All of these prices listed over here are considered strike prices, okay? So the Wall Street greater than 21,140 by 4 p.m. is your entire strike statement, okay? And this is actually what you're trading is the strike price. In other words, will the Wall Street 30, which uses the underlying Dow Jones, will it be greater than 1140 by 4 p.m.? Okay. And the answer is either yes or no. Okay. If it is yes, then you buy. If it is no, then you sell. Now, if you open up the chart, and let's go to one that's not quite so far away. And let's actually go to Forex so y'all can see the Forex market. And let's go to the USD Swiss franc. Now this one is a very slow mover. Okay, it doesn't want to let me see any of the strike prices. Okay, we can see them on the Aussie. So let's go to the Aussie. And let's go to the 10 a.m. to 12 p.m. And currently prices trading at 74.64. You can see that because the indicative price index is telling you prices currently at 74.64. Now you have a couple of choices here. You can either go long or go short depending on whether your bias is to the short side or to the long side. Now remember, this is for educational purposes only and not to be construed as trading advice. And let's just do both of these. We're going to do a long and a short, okay? So on this long position, you can enter that with $29 now. Okay, if you see here, there's your max loss, $32.75, max profit, $67.25. So I'm going to place that order, and I'm not in it yet, and I can tell that because it's gray. And in the meantime, I'm going to do a short, and this is all dependent on whether you have a bias to the upside or downside. In this case, the bias to the downside has $19 of risk for $81 in profit. Now, you can see I have both a long, because it says +1, and a short, it says -1, okay? Now, if price moves above my strike, which is at 74.68, how did I pull up the chart? You just click under the chart icon. Okay. Now, we're going to increase this just a little bit. Now, here is your strike price. Okay. It's 74.68. And here is your other strike price, which is 74.60. So the difference between this is 8 pips, okay? Now that means that there will be a strike price every 8 pips, right? Right, okay? There's one piece that you did not get. Do you see this red and blue box here? That tells me there's another strike price there. Now if I expand it, you can see actually it's not 8 pips, it's 4 pips. Okay, what does that mean? That means there will be a strike price every 4 pips. 64, 68, 72, 76. Since it's such a 4 pip strike width, it's so small, you can just about trade the USD or the Aussie, the USD yen, the Aussie dollar, and the euro dollar about any time of the day. Because any time of the day, just about, they're going to move 4 pips. Okay? Do I recommend 20 binaries? What do you mean, Marlene? The 20-minute binaries? I think it depends on the trader's experience. For new traders, no, I would not recommend it. You know, if you're a new trader, You need time to learn and process information. Why are you pushing yourself to do a very quick binary? Okay, you need time. You need time to decipher your chart. You need time to analyze your chart and decide whether you need a long bias or a short bias. 20 minutes is not a lot of time for you to process your information. Sometimes I use the analogy of my algebra teacher, okay? When I was taking algebra back in middle school, she made it seem so easy. She could work that problem out in 30 seconds, okay? It took me 10 minutes. Why? Because I had to step myself through the process that she did, okay? What is the gray box moving up and down on the right-hand side of the screen? That's the indicative price index. Is the euro US dollar available during the Asian session? Yes, it is. The Aussie dollar, the euro dollar, the USD JPY are available the full 23 hours. And this is something that I encourage you to do, okay, is to go out and actually look on Nadex and, kind of become familiar with the product that you're wanting to trade. So one of the first things that I did, and I have a lot of experience and I still did it. If you come up here to markets and you go to Forex, scroll down to Forex contract specifications. And if you do that, then you can actually scroll down and say, okay, on the euro dollar, when are they available? Okay. Intraday beginning at 8 p.m. Sunday. 8 p.m. is the first expiration through 4 p.m. on Friday. Okay. When do the dailies, how many pips are in the strikes? When are they available? Okay. Monday through Friday, 3 a.m. Monday through Friday, 7 a.m. Monday through Friday, 11 a.m. 20 pips on the strike width. That means if there's one at 60, the next one will be at 80. I already know when I'm looking at this chart, I already know where is my next strike price. For example, okay, if you're looking at this, I knew that there was a box there because I know my strike width, okay? So when this is down like this, without even seeing the red and the blue box, I already know this is wrong. I've got a strike in between here, okay? And being able to identify these things, to me, is very important to you as a trader, okay? Yeah, some people like spreads better than binaries. Some people like binaries better. I think it depends and is more important on how the market is moving. Because if I have a slow market, okay, I really do not want to be trading spreads. I'll trade binaries, but not spreads. Are you in your live account, Francis? Because the demo is using a new type of charting, but the live uses the older style. They haven't changed it to the new style of charting yet. They're still tweaking this one before they go live with it. And this is a great example right now. Do you see how slow this price bar is moving? Okay. this would not be a good time to use a spread, okay? So if you're just tied to using one type of method, for example, only spreads, well, you know, you have to be able to say, no, I'm not trading today. Whereas tonight we have the Bank of Japan rate announcement, okay? Well, that's when I would consider trading a spread because we're going to get a 100-pip move. Tomorrow morning, we have the Euro rate announcement. Okay, I'm going to trade that one because it's going to move the market. What's the difference between a binary and spread? Actually, I have a presentation on that, Terry. I think that's beyond the scope of this presentation. But if you go to the Learning Center, Terry, and go to the webinar archive, if you go to Trader's Help Desk, it's how to improve your risk to reward with Nadex spreads, and that will explain the difference to you. And also, while I'm just on these topics, if any of you actually tried to log into your demo account and you discovered that you forgot your password, if you click on their link, it will probably be really beneficial for you because they will send you your password through email versus calling them. And there's an option there. Let me see if I can bring it up. It says forgot password, and you'll get it. It's like almost instantly versus trying to get them on the phone and get them to fix it. So do you see here it says forgot your login details? If you just click on that and you provide the username or the email address, they'll send it to you via email. And let me tell you, that's a lot quicker than trying to get somebody on the phone. Now, in this case, this expires at 12 p.m., okay? That's about 30 minutes, right? And it tells you right up here, it's going to expire in 12 p.m. Now, we are long on this strike, okay? And that is because we bought the 74.68 strike, right? That means literally that the Aussie dollar has to be greater than 74.68. Okay, this is a very literal statement, okay? And this is the most important piece of that strike, I think, besides the strike price itself, 74.68, okay? And we're going to put that. Now, somebody asked me about this little thing over here moving. Right now, I know it's at 74.665. Now, notice that the strike has 4 digits and this has 5 digits, okay? That 5 is the point of precision or the half pip, okay? And if this is 74.681, then I receive the maximum payout. But if it is 74.660, I do not receive the maximum payout. I would lose what I paid on entry, okay? Yes, a long is always a buy position. A short is always a sell position. And this is when one tick can make a huge difference. Now, going to erase that real quick. And I want to shrink this so I can actually see the open positions. It's very important that you pay attention to the open positions because this is telling you what your average price was, $32.75. What does that mean? That means I paid $32.75 to enter the long position. Does that mean I paid $83 for the short position? No, because a short counts down from 100. So actually that tells me my profit potential is $83, but my risk was 100 minus 83, or about $17. And this is on the short or on the sell side. Does everybody understand that? And you can also set profit targets on these. And this is why they're not always all or nothing, because I can come in here and you see where the -1 is? I can click that and I can actually set a profit target. If I set a profit target on a short position, we need to, and this is kind of confusing to some new traders, but when you are selling a binary, you want to sell higher than what you're going to buy it at. So I sold it at 83, okay? That means if I want to exit that position with profit, I need to come under 83, okay? So I'm actually going to set a profit target here of 20, okay? And that means, okay, that if the buy side comes all the way down to 20 and there's an available buyer, they're going to let me buy it. I can also do the same thing on the long position. The difference is on the long position, I always go up, okay? So I entered at 32.75. I'm going to go up to 85 to set my profit target. Okay? Now, there is also a possibility that price will stay right where it's at for the next 30 minutes. In that case, I would lose on both the buy and the sell side, which pretty much equates to about $50 for both positions total. Does everybody understand that? Any questions on that? Terry, is this the first time you have been in a webinar with me? Okay. What I really suggest, because I've done a lot of webinars, I would suggest that you go to the webinar archive and under filter by presenter, we go to Traders Help Desk, and there are a lot of videos, 2 pages of videos there on other presentations. And I think it would actually help clarify some of the questions that you have and increase your understanding of both binaries and spreads. Some of the concepts I go through real slow and give a lot of examples on so you can better understand it. When you set a profit target, does the ticket tell you the overall profit you will get on that binary? No, it does not. And this is why I actually stress to you, Sharon, to be able to calculate and know where your entry price was and where your profit target is, okay? For example, let's use the Aussie dollar, okay? I have set a profit target at 20, okay? So what we're looking at is the difference between my entry price, which was 83, and the profit target if it gets filled, and that would be 83 minus 20, 63, okay? That would be my profit potential. Now, on the Aussie dollar long position, we set a profit target at 85. Okay, what did we pay to get in? 32.75. Okay, so my profit potential here would be $52.75. And, this is one of the reasons I stress so much to understand, what are you doing on the buy side? What are you doing on the sell side? Okay. Yeah. And sometimes it's just working it through, Sharon, and seeing someone else, work it through. I can automatically tell you, okay, if I'm paying $30, that gives me $70. Okay. If I'm paying $20, that gives me $80 in potential profit. If you're doing at the money, okay, at the money is always the one that's closest to 50. In this case, it'd be probably the 71, okay? That's going to be your at the money. The in the money would be the 94.25, and the out of the money would be 28, because out of the money has the lowest risk, okay? The at the money is always going to be closest to the $50 mark. And that's on the buy side too, guys. On the, and I can actually show you on the chart as well. Let me expand this so we can see all of the prices here. Okay. So right now, if you're looking at this chart, this would be your at the money. Okay. If you're going long, this is your at the money, because this is currently where price is closest. Okay. For a long, this would be your out of the money, because price is trading down here. Okay. And your strike price is up here. Okay. So price has not got there yet. That's the out of the money. Okay. Your in the money is down here. Okay. Because price is trading above it. Now your indicative value is here. Okay. That is above. So that's the in the money strike. Does everybody understand on the buy side? And if you look at it as, okay, where is price in correlation to the strike, it kind of gets a little bit easier to understand. Now, on the sell side, it's sort of the opposite, okay? The in the money would be up here, okay? The at the money remains the same, but the in the money is above and the out of the money is below, because price has not got here yet, okay? Price is here. We need it to get here. So on the sell side, this would be your out of the money. Does everybody understand that? Any questions? Now, again, tonight we have the Bank of Japan rate announcement. Now, it's not going to be available yet, but this is one that I would be in here tonight saying, is there a binary or a spread potential that I could trade that has low risk, okay? And if you look at this, you've got the Euro Yen, you've got the British Pound Yen, and you have the USD JPY, you know, bank announcement for Bank of Japan. Immediately, that gives you 3 currencies to trade right off the bat. Actually 4, because you've also got the Aussie Yen, okay? And this allows you to come in and trade these Forex spreads because that should be a substantial move off of that. Okay? Is it always? No. Typically, yes. You know, tomorrow on the euro, okay, a lot of people believe that the euro moves right at the rate announcement, and actually it doesn't. It moves at the press conference, okay? And that's the one that you would want to trade. The press conference is scheduled. It's not tomorrow morning, it's Thursday morning, and the press conference is at 8:30. The minimum bid rate actually comes out at 7:45, okay? That's not the one you want to trade. The one you really want to get in on is the press conference, because that's the one that actually will move it about 100 pips. Yeah, my computer is wrong. Yes, it is Thursday. Thank you, Mark. For some reason, I thought it was Tuesday today. It comes out at 8:30 tomorrow. Now, the Bank of Japan press conference will be at 2:30 tomorrow morning. The rate announcement is what moves the market, but they usually don't give you an exact time for that one. Usually it's between 10:30 and midnight. Now, I want to go to the working orders real quick. Okay. Do you see where the current market is at 26 right here? Now, that order was just filled. Do y'all see that? Now, this one had a full loss, which was $32, but you still ended up making money even though you were both long and short. Why? Because you selected to use low risk binaries. Now, you can't do that if you're risking $50 on each one. Do y'all understand that? Because the difference between 150 is 50, so you haven't made anything. All right, any other questions today? I use forexfactory.com, David. I've just been using it for years. If you go to forexfactory.com, it actually gives it to you. And the only reason I use it is because I've used it forever and a day. And I can actually filter it according to what I want to see. Most of the time, I do not look at anything other than the red reports. This week, I have had to look at holidays, and the white is holidays, because we did have some holidays in other countries this week. So let me see if I can do that. So on Monday, New Zealand and the Australian dollar and the euro had holidays, okay? And the rest of it is like Bank of Japan, Bank of Japan, Bank of Japan. Next week's going to be a really busy week as well. If you go and look at it, one of my favorite reports actually comes out next week. It's the non-farm. But do you see how Monday, and this is why you need to actually kind of plan your day using this calendar. Do you see how the Swiss franc has a bank holiday? The euro has a bank holiday in France, Germany, and Italy, and the UK. And then Japan has a bank holiday on Tuesday. So what does that mean for you as a trader? Well, if you're trying to trade London, it's not going to be very volatile because everybody's off on a holiday. You know, if you're trying to trade Japan, well, Tuesday night's going to be an issue because there's not going to be many people there trading. Thursday, Japan has another holiday. Wednesday too, so that just tells me that Japan is probably off the market Tuesday, Wednesday, Thursday next week. That means I can go to the pool and relax because, hey, it ain't going to be moving. Or I can go to bed early or go to a movie, do what you want. Do y'all understand that? You plan your schedule around these markets and the one that you're particularly trading. Okay, any other questions? If not, they did record this presentation, so they will send out an email. You can review it or share it with other people that you think need the information. How do you filter it? Just click on filter. Okay, it's the little filter icon right here in green. And then just select the red reports and the white. If you mouse over that, it tells you what the meaning is: low impact, medium, holiday. You can decide, okay, I just want to trade the yen, and just filter it by yen. In which case, this is what it looks like. You only see the things that come up that are going to affect the yen. Okay. Well, thank you. I hope everyone has a wonderful day. Again, I do appreciate you joining me this afternoon. I will be back next Wednesday. We're going to be doing support and resistance. Should be a really great webinar. And I look forward to seeing y'all there.